There's another look at the futures market in the United States. You can see the Dow contract up by 2/3 of a percentage point. It could challenge another all-time record high today. It looks like it's in that range already. 41,449 points is the futures contract level of the Dow. The NASDAQ 100 up by 1/4 of a percentage point, despite the trading we're seeing in Nvidia today, and the S&P 500. Likewise, despite the negative trade we're seeing in Nvidia, down also by 1/4 of a percentage point. Well, the tech sector and the Canadian banking sector are the focus of many Canadian investors this morning, with shares of tech titan Nvidia selling off despite beating expectations, and a big earnings beat at CIBC. For insight, let's bring in Christine Tan, portfolio manager at SLGI Asset Management. Thank you very much for joining us.
Morning, Paul.
Is it a surprise to you to see Nvidia shares selling off after what looks like another very strong set of results and some guidance that was pretty robust as well?
Not really. So one of the things that our equity managers have sort of been talking about with regards to Nvidia, it's a great company. They're definitely the leader by a big margin, pun intended. But I think the challenge is just expectations are so high. And if you look at how quickly Nvidia was able to really grow its earnings last year, and then for the first half of this year, the law of large numbers is starting to catch up. So the pace of growth, even though still amazing, you're going to be looking at growth sort of in the high 20s, low 30% range. Again, it sounds amazing, but compared to last year, where you're triple-digit growth quarter over quarter, it's different. So it's more about just a resetting of multiples to recognize still a great company, still by far the leader. But, and I think you mentioned earlier as well, there are sort of there's a bit of commentary now around margins, basically input prices going up and pricing power kind of maybe topping out a little bit.
Do you own the stock on behalf of clients?
So some of our managers do own it in the growthier portfolios.
And what do you tell clients when they want to buy this stock? We get a lot of calls from viewers who want to buy. They're wondering, should I buy at these levels? This is a very common question.
Yeah, I can't really talk specifics about the making a recommendation on Nvidia, so I think it's, unfortunately.
Okay, let's go to CIBC. We'll show viewers some numbers on the CIBC results. CIBC reporting earnings per share of $1.93 per share in earnings, and that was more than analysts had expected. You can see the expectation was $1.74. Here are some other numbers on CIBC as well. Some of the basics. Adjusted profit rose 28% to $1.9 billion. It got a big boost in profit through the, among other things, higher revenue and lower credit costs. That's a good combination, and that drove a significant advance in quarterly profit. On the subject of provisions for credit losses, that number was $483 million across the bank. That was down 6% from the prior quarter, and that is not what we are seeing at all the banks. We are seeing many of these banks ramp up the provisions for credit losses as the quarters advance, and that number of $483 million was less than analysts had forecast in terms of earnings per share, and that would go a long way, I think, to explaining the earnings beat. What are your thoughts on the Canadian banks now that all of them have reported?
It's you're seeing a lot of dispersion, which is something we'd expected. So we've been sort of talking about how, if you look high level, the Canadian economy is definitely stagnating, and we're also seeing a very stretched Canadian consumer, which then reflects on what the banks are able to do in terms of loan growth. But what we had also said is there's going to be a lot of dispersion based on, for one thing, business mix. So if you have access to investment banking, asset management, some of the more fee-based businesses, that helps. That's what we call a good asset mix. And then to your point, as you just said with CIBC, the credit experience, the credit underwriting is also coming home to roost. So you sort of alluded to the fact that there is a wide dispersion right now. There are a few banks where credit losses are either coming in line or slightly above what analysts were expecting. But then you had a couple like CIBC and RBC that's coming in significantly below. So dispersion has been the theme of the day when it comes to banks. Exposure
to the U.S., a positive or a negative, or does it depend on a bank-by-bank basis? BMO has a fairly well-identified problem with this U.S. lending.
That's right. So I think it's exactly as you characterize it. It's bank by bank. TD has a lot of U.S. exposure as well. The challenge they're more facing is just a resolution of the AML issue that they're currently sort of facing. RBC has a fair amount of wholesale banking business in the US. So it depends on the mix and the type of exposure that you have, really.
You're advising clients to add quality cyclical companies. Explain that to us at this point in the market.
So we're not necessarily advising clients, but what our underlying managers, so our team specifically, we don't select stocks, but we make asset allocation decisions. And then we hire really good managers to pick the stocks for us. So what our managers have been doing for the last several quarters is they're adding quality cyclicals, which might sound unusual because the economy is moderating, but essentially what they see is valuations are attractive and you're starting to see central banks normalize rates. So you're looking through the cycle because investors, typically you want to be forward looking instead of focusing on what you're seeing right now.
Christine, thank you very much.